Welcome back. Today is going to be a short video as I've got a bit of a cold, and I was speaking with a friend recently and he said to me that Boohoo is a good investment, and I wanted to ask him, why do you think this is the case? Now, it's important to talk about the idea here that he isn't an investor. He doesn't own any individual stocks or shares. It was just his opinion, but it led me to some thought. Why is Boohoo a good investment? Why would Boohoo be bought over the likes of Asos? I'm going to explain my reasoning behind here. We've also got their financial results for Asos that we'll be looking at in the background, as well as a portfolio review. So my friend tells me this, and his first reason was, well, I trust you. You know what you're doing in the markets, and therefore, if you believe that Boohoo is a good investment, I do too. And that's great. That means I've got a good friend there that certainly trusts my instincts and my abilities. But at the same time, I also feel that that is absolutely how you should not invest in the markets. And ultimately, it came to the point where I really boiled down and said to him that realistically, if you're going to invest in the markets, you can't trust anyone. You have to really do the research yourself. You are the only one that is capable of understanding and learning more about your companies. You are the only one that can therefore fairly value these businesses on what you believe in. And that breaks it down into two core aspects. Quality, numbers and opinion, effectively. You've got the facts and figures, and you've got the opinion, which is qualitative and quantitative data. Quantitative being the numbers, and obviously qualitative being the customer opinion. And I really boiled this down and explained it to him. We were talking about, okay, but what would make Boohoo a better business than Asos? And it got to the point of going, well, okay, if money's tight, I'd like to buy a Boohoo product because the quality is pretty consistent, and at least it's cheaper. And there we are. So the first competitive advantage that Boohoo had was the likes that they have better pricing than that of Asos. There are obviously other advantages as well, and we can really see this in the gross margin of Asos. So you can see here that their revenue on a constant currency basis increased by 2%, and that's because they're a marketplace, right? They're reselling other brands' goods as well as some of their own brands, but this ultimately means in this situation, whilst their revenue is going to remain quite consistent, quite, let's say, less volatile, their margins are certainly getting eaten into because obviously the suppliers that are supplying these clothing are obviously going to push on cost pressures towards Asos, who have then got to resell at a higher price. But don't forget, they're getting squeezed in the middle here because they still want the demand of selling these products through their marketplace, but also they're trying to make a profit. So they're probably trying to resist increasing prices, but if the suppliers are doing that, they've got less control. Whereas the likes of Boohoo actually is on the opposite hand of the spectrum. Boohoo are seeing cost pressures from increased cotton prices, but since they manufacture all of their clothing themselves, they've got vertical integration. Their biggest concern is actually their warehousing and their logistics, getting the clothing to the nearest location as soon as possible. Because a majority of this clothing is made offshore with a test and repeat business model, it means that Boohoo are very much struggling a lot more with the logistics sides of the spectrum. Because Asos would expect the suppliers to obviously be providing the product, Asos are able to deal with that effectively. Boohoo, however, have really got to get ahead of that, and it's leading to extended delivery times, which on a company like Boohoo, where it's fast fashion, is very hard to keep that advantage in place. But you might also argue that Boohoo has a better cash position. At the moment, Boohoo's cash position, I believe, and actually from memory, I couldn't even recall this fact and figure, but it is better than the net debt position of Asos of £153 million. This is a large swing, and this is because they've bought Asos. They've bought Topshop. And because of this, obviously, a lot of their cash flow from their operations has been used into reinvesting, rebuilding these warehouses. And obviously, it means that now, on a balance sheet perspective, Asos looks inferior to the likes of Boohoo. And when I first bought them, that was the case because they've always consistently had levels of debt. It's just between this and the last update, they've been using up their cash balance, which could be of a concern. That said, obviously, they have got cash and committed facilities up to £650 million at year end, which is actually larger than their market capitalization. So they are in a very strong spot indeed, but it is worth thinking about. Another quality that Boohoo has an advantage over, which goes more to opinion, is their social media following, their brand awareness. Their brands are able to generate interest and traffic through their social media links, such as Instagram and Twitter, which they're usually posting relatable or meme-like videos and clips that they send out to their consumers. They know their age range very well, and they are very relevant within their social media circles. And because they have this gives them a competitive advantage in which they're able to obviously decipher both what the customers are interested in, more information, but also to put out promotions, generate interest, and keep them really in tone with the business and really keeping demand higher, which on a volumes-based business like Boohoo is very important because if they need to build these volumes, obviously they're going to need to push more for sales, and they're going to be pushing a lot more at trying to get discounts, promotions in play. So those are the most loyal Boohoo customers that might be on the social media brands, might be loving to participate in giveaways that are basically giving them free marketing indeed. Whilst Boohoo's management have had their criticisms in the past, and certainly quite a lot more than the average business, there is one thing to say: they do have a higher percentage as a holding of the company with insiders. Insiders, I believe, hold about 15 to 16% of the company of Boohoo, whereas if we actually look at Asos here using simply Wall Street and we go into the ownership of the business, their biggest private or individual insider is Nicholas Robertson, who owns less than 3% stake of the business, with individual insiders only holding 3.1% of the business, if we can see this on the screen here. Now, obviously, I prefer when investors have skin in the game, and therefore when the management of the board or even the owner of the company still holds a significant stake in the business. I think this is important because it means their beliefs and their strategies are also going to be aligned with that of the investors, and therefore I do believe that's a competitive advantage for Boohoo because they're going to be less reckless, and they're not going to be trying to pay themselves higher salaries, because guess what? By spending money on things that aren't deemed as important to the family or the investors in the company, they're going to be losing money or losing value in their shares. So in order for the likes of Mahmood Kamani, for instance, to increase his net worth, to have more money, he needs to be doing better with his business and growing it to appease shareholders because he's got a significant stake in this business, aside from the likes of just trying to increase his own salary and, save and invest more. It puts him more in line with the business, and I think that is another competitive advantage. Now, there's loads I could go into here, but I'm very ill and I want to keep the video short. My portfolio this week is down about 1.84%, which is actually worse than every single one of the markets. So again, I'm trailing it, and you can see here that over the 928 days I've been investing, I'm down about 62%, or my original annual salary from about 1 year ago. So that's quite a large swing. I remain confident I will continue investing, and I'll have more money next week, which I'm going to be plowing into more investments. Notably, Argo blockchain as well has continued its free fall, and I believe last episode we were talking when it was about 17 pence, and then it was about 35 pence before that. You can see how shareholder value can easily be destroyed in the markets. Have a fantastic day.